All right, let's talk CoStarGroup. They just dropped their Q3 2025 numbers, and wow, it was a big one. We're going to dive right into the key takeaways, focusing specifically on what their CFO had to say. So let's get to it.
So to really understand CoStar's story, we got to start with just one single number, 58. So what's so special about the number 58?
Well, according to their CFO, Christian Laun, that's 58 times consecutive quarters of double-digit revenue growth. I mean, think about that for a second. That is a wild streak, and it really just sets the scene for another incredibly strong performance this quarter.
Okay, so here's how we're going to break it all down. First, the record-breaking quarter itself. Then, we'll look at where that revenue is actually coming from. After that, the impact of their big acquisitions. We'll do a quick financial health check, and finally, we'll see what they're telling us to expect next.
All right, Section 1, a record-breaking quarter. You know, it's one thing to have a good quarter, but it's another thing to completely blow past your own predictions. And that's exactly what CoStar did.
Okay, let's look at the highlights. Total revenue hit $834 million. That's a 20% jump year over year. But check this out. The number that really jumps off the page is net new bookings. That's a measure of future sales, right? It shot up an insane 92%. So not only did they beat their guidance on revenue, they beat it on profit too. That's the kind of thing that makes Wall Street sit up and take notice.
So a 20% jump is great, but where's that money really coming from? Let's dig into the different parts of their business and see what's driving the growth.
And what you see is that the growth is pretty solid across the board. You've got Apartments.com chugging along with an 11% increase, LoopNet for commercial real estate is up 12%, and even their original CoStar product, the core of the business, saw a really healthy 8% growth.
And you know, that 8% for the CoStar product is actually a bigger deal than it sounds. The CFO made a point of this. The commercial real estate market has been pretty volatile, right? So for their flagship product to actually grow in this environment, that says a lot about how essential their data is. It shows just how resilient their business really is.
Okay, now for a really big part of the Q3 story. It's not just about their existing businesses. It's about a huge new acquisition, integrating the Australian marketplace Domain. And let me tell you, it made a difference right away.
Just look at the difference here. The company's organic revenue was a very strong $808 million. But once you add in the revenue from Domain, that number jumps to $834 million. And get this, they only owned Domain for about a month of the quarter. That's a massive impact in a super short amount of time.
Yeah, that's $25 million in revenue from just over a month of ownership. It's pretty clear this move is already a big win for them, adding a whole new dimension to their earnings right out of the gate.
So fast growth is great, but is it built on a solid foundation? Let's take a peek under the hood at the company's overall financial health. What's the secret sauce to their stability? It really comes down to this number, 94%. That is the renewal rate for their long-term subscribers. We're talking customers who've been with them for 5 years or more. That is just incredible customer loyalty. It gives them this super stable, predictable revenue stream that investors absolutely love. It's like a financial cushion, no matter what the market is doing.
And it doesn't stop there. Their balance sheet is rock solid. They're sitting on $2 billion in cash reserves. And what are they doing with some of that cash? They're buying back their own stock, $51 million worth this quarter alone. When a company does that, it's basically shouting that they believe their own stock is a great investment.
Okay, so Q3 was fantastic, but what about the future? Let's look at the official guidance to see what they're projecting.
And it looks like they expect the momentum to keep on rolling right into Q4. They're forecasting revenue to be even higher, somewhere between $885 and $895 million. And look at the profitability. Adjusted EBITDA is expected to jump up significantly too.
Now for the full year 2025 picture. Their revenue outlook is pretty much on track, but here's the key thing. They've raised their guidance for profits. They're bumping up their full-year adjusted EBITDA forecast, and the CFO said that's a direct result of how well they did in Q3, plus just being smart about their spending.
So what's the big takeaway here? You've got a company with record bookings, a core business that's proving to be incredibly resilient, and a brand new acquisition that's already hitting the ground running. They're just firing on all cylinders. Which leaves us with a really interesting question. Is this amazing quarter just setting the stage for an even bigger 2026?